Hi, this is Zach here from Zach's Traders Cafe with a look at some single stocks on Tuesday, the 4th of October, starting off with 88 Energy, and it looks like we've got decent progress here above the 50-day moving average of 2.39 pence, while we hold above that, and also the floor of this rising trend channel from the beginning of the year, based around the 2 pence area, looking for a target as high as 5.5 pence over the next 1 to 2 months. Additional resistance probably here just above 2 pence, rather above 3 pence, with the gap down from the beginning of last month, but really enough looks as though it's been done here to get us up towards the higher levels over the near term. Moving along to a rather bigger company, Aggreko. Here we can see that there's been a sort of surprising rebound here, sort of bouncing off the bottom of, or rather the top of that gap there from March, the floor there around £9.31, so the recent support there around exactly 9.32 in fact was the low there. So interesting bullish development there. The view at this stage is that we should at least be able to head back towards the 200-day moving average of £10.37, above that on a weekly close basis, but then hopefully start to negate the rather awful gap down seen at the beginning of August. Stop loss ideally right just below the £9 level, which was the initial March support. On to an AIM stock, Clinigen, one of the darlings of that part of the market, looking very, very powerful indeed as far as the price action is concerned. Rising trend channel here from basically May and June, heading towards the £9 level, especially while there's no end of day close back below that late September peak at £7.39, so a decent risk reward trade on offer there. The 200-day moving average started to rise, which could also power charge the current break to the upside. Speaking of stocks with bullish momentum, we've got EVR Holdings, where you can see there's been a rising trend channel there since August. I've had to upgrade the target here from 2.5 to 4 pence. We've cleared 4 pence, looks as though we're heading towards 5.5 to 6 pence over the next month or so, and that target valid while there's no break back below the initial, or rather the former September resistance of 4.05 pence. Wouldn't expect the shares to hold back below the 10-day moving average of 3.27 pence for very long ahead of that move towards 6 pence sometime towards the end of October, beginning of November. Back in the FTSE 100, we've got Intertek, and here you can see that there's been a gap through the 50-day moving average, one of my preferred technical signals there. We had a sideways consolidation since the late June rally for the shares, so enough time has passed really for the slack to be taken up. Looking for a target here as high as £40, which is the top of this rising June trend channel. Stop loss, the 50-day moving average at £35.48. On to all bar one owner, Mitchells and Butlers. Here we've got interesting breakthrough the 200-day moving average over the start of this week, really. That's running at £2.71, and we've also broken through that late June resistance as well. The view at this stage is we're in a rising trend channel from the end of June, and really that while there's no end of day close back below the initial support of today at £2.85, we can head as high as £3.50 over the next 4 to 6 weeks in what looks as though it is a very powerful breakout indeed, with those very solid looking candles there for the shares. Finishing off with former FT owner Pearson, now an education group. Gap down here after the gap to the upside here after the higher initial low for October. The view at this stage is that while there's no end of day close back below the 20-day moving average at £7.77, we should see an initial target here up to the 50-day moving average at £8.43. Above that would then hopefully open up the prospect of a retest of the best levels of the year above 950 for the rest of 2016. That's it from me. More updates at the same time tomorrow.